and welcome to Business Today. I'm Siddharth Zarabi and you're watching Easynomics as we wait for the latest quarterly growth numbers that are set to be released just in minutes from now, the third quarter, as well as quarterly set of data that will be based on a new GDP series. And to discuss the impact of that, we are joined by two noted economists, Sunil Sinha, Director and Principal Economist at India Ratings. We are also joined by Rumki Majumdar, Economist at Deloitte. Welcome to the show. Sunil, I want to start with you in terms of your expectations and also to explain to our viewers the significance of the new data series and its implication on the numbers.
Well, Siddharth, as we all know that the first advanced estimate has pegged the overall GDP growth for the current fiscal year at 7.4%. So it is in that context that, we believe that the third quarter number would also be in line with that. But having said that, I guess the more important issue that we need to discuss today is the new GDP series, which is going to be on 22-23 base as opposed to 11 and 12. As we all know that, so far as data is concerned, the track record of Indian data has been pretty good over the years, but lately there have been questions raised about how robust is the Indian GDP data, or for that matter, any other data that government puts out in the public domain. And it is that context that the comment made by IMF, which pegged the India's GDP data, or for that matter, national accounts data, under the C category, had raised several issues. And I'm sure that some of the issues that were raised by IMF when they graded Indian data in the C category would get addressed in today's new series. Firstly, of course, the basket that used to be tracked for assessing the GDP data will undergo a change. And also, I'm sure that the way the economy has moved away from, unorganized sector, more towards formal sector, would also find some reflection in today's, the GDP data that will be announced.
Okay. Rumki, coming to you, the significance of both the data series and your own expectations.
So we are expecting a very strong quarter, Q3 versus festive quarter. So we are expecting around 7.9 to 8% growth this quarter itself. And pretty much all high frequency indicators are showing very, very strong growth. E-way bills, IIP numbers, they were pretty much one of the highest ever seen. Vehicle sales. So we are pretty confident Q3 will be good. And the revision, the importance of this revision is that a lot of changes are being brought about, which kind of relates to the current scenario. One, ASUS and PLFS data, labor data will be included, which means an unorganized sector, which was getting a lot more extrapolated. Now we will actually be capturing the absolute figures. That's a good news. I think GST transaction data across sectors are going to get incorporated, which is again a very good thing to do, because then we will get real estimate rather than what we were capturing earlier. Other one is, I think we are also looking at new CPI series. So we will probably likely see a deflator much better than what it was earlier. So we might see the nominal and real GDP gap to be a little higher than earlier, which is good in a way. So in short, we are expecting the new data to be much more relevant to what today the real economy is, and give us a better estimate. And I wouldn't be surprised if we get a higher estimate than what we have been working with so far.
Sunil, for the uninitiated, the backdrop to this revision, you touched upon the IMF bit, but the backdrop, it's taken us several years and it's also a periodic review. Just give our viewers a sense of the history that has gone into this.
Yeah, Siddharth, typically, economy undergoes a change, and to capture the change, it was always believed that after a decade, the base of the series like GDP, or for that matter, IIP, CPI, all of that needs to be changed. So one way to look at the change in the base is to observe that, if we go back and look at some of the series that were published in the past. So when 11 and 12 series came, before that, the series base was 2003 and 4. And before that, if you look at the series, then the base year was 93, 94. So roughly around 10, 12 years, you have a change in the base. And this is done basically to change, to capture the change that has taken place in the economy. Because many of the products, say for example in IIP, many of the products which were included in the basket may no longer be available because of the change and the technological advancement that has taken place. And if you track those commodities to construct your series, then obviously you are missing the economic activity. So is the case with the GDP data, that GDP data always had a very large component of informal sector. And
Yes.
most of the informal sector that used to be estimated was on the basis of the data that you have for the formal sector. So to that extent, if formal sector has done well, then you are overestimating the unorganized sector. And if formal sector has done bad, then you are probably underestimating the unorganized sector. So let us hope, I mean, some bit of unorganized sector would properly get captured in the new series. And apart from that, of course, as my co-panelist indicated, that the GST series or the GST related data is now available. So that can also be used. And even the inflation number, which has a number of times raised questions around the nominal and the real, would also get addressed, because if the CPI is now correctly predicting the consumer price index, then and also the WPI, then it will be much closer. But I still believe that we will have to watch for what the GDP series has so far as services sector is concerned.
That's absolutely right. In fact, viewers, what this really does is that it provides us. Okay, we have breaking news. The number seems to have come. I'll request my producers to bring that back up on the screen. But it's really clear that with the new series, we'll be able to look at the data in a more closer number. 7.8% Q3, 7.8%, and FY26 nominal GDP seen at 8.6%. The numbers on the screen for you viewers. Third quarter GDP has come in at 7.8%. That's the big number on the screen at this point of time, 7.8%, and the nominal number for FY26 seen at 8.6%. Quick first reactions from you, Sunil, quickly, and then to Rumki.
Yes, as I said, that since the overall growth for the year has been pegged at 7.4%, so anything in excess of 7.5% was expected so far as third quarter is concerned. And of course, Rumki's estimate was 7.9%. So 7.8% is very close to what Rumki was saying. And in my case also, since I do not have a exact number, but I was expecting it to be in excess of 7.5%. So broadly in line with the expectation.
Rumki, you were pretty near, and I'll also request my producers to bring up the poll data and see who else came close to this. But Rumki, your quick comments.
Yeah, as I said, it was a festive quarter. We were expecting a big bang number. So 7.9, 7.8 is in line with what we are expecting as such. So that takes 3 quarters to around 7.9% growth. Just one more quarter left. If that can be around 7, 7.5, then I think we are way above 7.4, what the government has given an estimate of. So I think I remain positive and optimistic that then we will beat this year fiscal number will beat the predictions by the government as well. Overall, I think the nominal GDP I would have expected a little higher because
Okay.
that's where that's because the price inflation parameters. If you look at the CPI series revised, it is
Rumki, I
higher
have
than
some
what it was earlier.
numbers. Rumki, hold on. I have some numbers. Third
Yes.
quarter new GDP series, agriculture sector growth at 1.4%. I'm going to take our viewers through these numbers. In the FY26 GVA growth seen at 7.7%. This is as per the second advance estimate. Yeah, we have some numbers, other numbers also, for example, of the capital expenditure numbers, but Q3 new GDP series based GVA at 7.8%. We have the numbers for second advance estimate FY26 GDP growth at 7.6%. So I'm getting these numbers as we speak. The whole release, we are still awaiting that. But Rumki, agriculture sector growth seen at 1.4%. That's the number that I have to add to what you were just talking about.
Right. So agri growth seems to be a little lower, which is surprising, but probably that kind of tells you that the rest of the economy has done very well. Manufacturing and services probably would have been pretty strong to bring the overall number to 7.8%. What will be interesting to see is if the revised number changes the share of these sectors to contribution to the GDP. Because so
Okay,
far we
I'm
have
getting
seen.
more numbers, and let me just go through them once for the benefit of our viewers. New GDP series, I'll mention that wherever. New GDP series, private consumption growth at 8.7% versus 6% a year ago. We have other numbers that have come in. New GDP series, construction sector growth at 6.6% versus 6.4%. New GDP series, manufacturing sector growth at 13.3% versus 10.8%. New GDP series, mining sector growth at 4.7% versus 13.1% year ago. So far, this is the only one where we are actually seeing a decline year on year number. As far as agriculture, it was 1.4% versus 5.8% a year ago. So mining and agriculture down. These are two, but just again to quickly take you through some of the other numbers. We have construction at 6.6. We have manufacturing at 13.3 versus 10.8. Quick thoughts, Sunil, to you first.
Well, I mean, one of the way to look at the lower agricultural growth clearly is that the base is very high. As you just mentioned, that 1.4% against 5.8% last year. So clearly, somewhere the base effect is playing out. But yes, the encouraging part to me is the manufacturing sector growth, because manufacturing sector is something where a lot of focus was there throughout the year, mainly because the kind of global upheaval we saw after the Trump's tariff came into play, that most of our exports would suffer, and finding an alternative destination for export in such a short span of time is not possible, and everything that we export cannot be absorbed in the domestic market. But despite all of these, manufacturing sector doing so well is certainly an encouraging part of the story. And but I'm more keen to even know what exactly has happened to services sector.
I'm still waiting for that because that data is coming in spurts. So let me take you through some more data that I have. New series nominal GDP at 8.6% versus 9.8% a year ago. New series GDP growth at 7.7% versus 7.1% a year ago. New series GDP growth at for July to September quarter. The earlier one was April December. July September new series GDP growth is at 8.4% versus 8.2% in the old series. April June new series GDP growth is at 6.7% versus 7.8% in the old series. October December new series nominal GDP is 8.9% versus 10.1% a year ago. Government consumption expenditure growth at 4.7% versus 7.6% a year ago. We have gross fixed capital formation growth at 7.8% versus 6.3% a year ago. The FY24 GDP growth number has been lowered to 7.2% in the new series from 9.2% in the old series. FY25 has been raised to 7.1% in the new series versus 6.5% in the old series. I now have the number that you were waiting for, Sunil. October, December, new GDP series, services sector growth is 9.5 versus 8.2% a year ago. So a bit of a mixed bag. I don't know how much of this both of you got down, but Sunil, back to you again, because you were talking about services and that number coming in at 9.5% versus 8.2%.
Well, one of the reasons why I was so keen to look at the services sector is that, as we all know, that services sector is the largest sector in the Indian economy. And in the last 10, 12 years, the way many of the new services that has come into existence, was giving me that the overall contribution of services sector to the GDP growth would only go up, even in the new series. And here, as you tell me that the GDP growth in the new series is 9.5%. Versus 8.2%. So clearly, on such a high base of 8.2%, if we are getting a 9.5% growth in services sector, which simply means that services sector has further contributed to the overall GDP growth in the new series.
Rumki, your thoughts on these numbers that you've been hearing me rattle off?
Yeah, so I think agri did underperform, but manufacturing, fantastic growth, 13.3%, which kind of tells you that I think the high value add manufacturing sector is outperforming and doing really well. Services, again, a good news for us. What is interesting is GFCF is very strong. So that tells you that the investments in the country is picking up. That was one of the pain points India was having, and that is 7.8% versus 6.3%. So clearly, the investment pillar of the growth is also growing. Consumption remains very strong. So demand for side is looking up really well. Maybe exports and import numbers comes up, so then we will get to know how much the tariff has actually hit us. But clearly, domestic demand is a champion here, which has kind of pulled the growth pretty good. And I think you mentioned the advanced growth numbers for FY26 is now 7.6%. So clearly, government has also revised up the FY26 projections for the year. So overall, I think good government spending is lower. And I think the numbers in what you mentioned was fiscal deficit is just 63% till January. So clearly the government is being very, very cautious in spending. They are consolidating, which is a good news, which is a good signal for investors. That should probably reflect in more money coming into the country and more investments picking up.
Sunil, would these revisions satisfy any criticism or doubts that have existed in some quarters in the past? Even the IMF's categorization, when we followed up with them, was not really casting any aspersions on the way the data is formulated. They perhaps were talking more about the gaps. But in your estimation, do you think this answers the criticism?
Siddharth, we will have to, I guess, wait for some more time, at least in terms of what exactly have the new series done in terms of improving the quality of the data. Because right now we have just looked at the numbers, but we really don't
Yes.
know how these numbers have been constructed. I mean, say, for example, the MC21 data was used for assessing the the formal sector. Similarly, the same growth number would be imputed on the unorganized sector to guess what could have been the growth there. So I'm sure that all of these things have been changed because over the last 10 years or so, there are many new data points that has emerged, and one of the biggest one is, of course, the GST related data. So we will have to look at those fine prints and then see whether some of the criticism which IMF had with respect to the Indian data has been properly addressed in the new series or not. I'm sure many of those would have been addressed, but still one may like to wait for the fine print to come.
Rumki, add to that, but I also wanted to ask you that do you think with this statistical effort and updation, and the Ministry of Statistics has spoken about it in the recent past, tried to explain the rationale and the reasons, and I'm not getting into it because we don't want to make this a very technical conversation, but do you think this will better inform policy making and give everybody, all stakeholders, a more accurate understanding of what is going on in the Indian economy? Because ultimately, these numbers are supposed to allow stakeholders to do a better job, whatever their job may be, as far as the economy is concerned.
I agree with you, Siddharth, because at the end of the day, policies are made based on what numbers they are seeing. And if the numbers are not correctly representing the economy, then policies will also not be very accurate. Look at how we have moved from 2011 and 12. We didn't have a digital economy. We didn't have a shared share ride or the OTTs that we have. So how can we even account for growth if we do not even account these variables that have become a very important part of our economic growth? So I think now that we have a better representation of many of the economies or digital economy, which is contributing to overall growth, we will likely be able to understand how much innovation is actually helping, how much the government should double down on efforts in strategic and manufacturing, frontier manufacturing sectors, what all policies should they bring in services sector, and based on which segments of the services is growing. For example, the global capability centers, if they are contributing very strongly, and given that over the last 10 years we have seen these GCCs contributing a lot to the growth, they will be like more policies will be announced. And if you see the budget announcements that were made, quite a few announcements were already targeting some of the sectors which probably are contributing more to the GDP. So we will see a lot more focused, targeted policies coming in, and I think this data will really help us estimate where we stand.
Okay, one more bit of data. Nominal GDP data shows that FY26 fiscal deficit at 4.5% versus 4.4%. Sunil, I come back to you to try and explain to our viewers about the significance once again. Base revision is not just about the use of new data sources. It's also about the improvements in methodology. Both of you spoke about the unincorporated sector, the informal sector, which has a very vital role in the Indian economy. With this, do you think to what extent really has the informal sector been mapped into a formal data estimation exercise like this?
Well, as I said earlier, Siddharth, we still have to look into the finer details. But for example, the very fact that the GST data is now available at a very granular level. And the GST related data does not only talk about the formal sector. To a large extent, it also talks about the informal sector. So, incorporation of GST data into the GDP estimation itself will give us a much better handle with respect to how we estimate the unorganized sector data, which we were not doing earlier. And apart from that, the other thing is that the way the digitization has progressed over a period of time. So many of the fintech that we are using, whether it is WhatsApp or phone pay, etc., they are also capturing a lot of data with respect to even the unorganized sector. Now, to what an extent those data can be filtered and used for GDP estimation, I don't know. But my sense is that I'm sure that these data would have been looked by the NSO officials, and they would certainly be using these data to arrive at a much better estimation of both formal as well as informal sector.
We will also, viewers, be showing you the press conference that is expected to start at any moment now. But Rumki, coming to you, as far as this rebasing is concerned, we moved from 2011-12 to 2022-23, but parallelly, as far as WPI is concerned, there is a lag. Do you think that has some distortion impact as far as real growth estimates are concerned?
It is possible. It is possible, but what they are trying to in the new method, what they are trying to do is they are using a double. Earlier, it was a double deflation method that was used. Now that has been also moved into a single deflation approach. So I think this will provide a more accurate estimation, especially in real manufacturing growth, given that when input and output prices are moving differently. So I think that will take care of a part of it. But yeah, as long as again, WPI series also has been refreshed. So ideally, it should not reduce the discrepancy over time. But I suppose that will be taken care of as we move from double deflation method to single deflation method.
Sunil, your thoughts on that point?
Well, so far as WPI and CPI is concerned, I mean, as these series have been revised, but as we all know that the way the economy's structure is changing, I mean, it is very fast. I mean, say for example, the way the overall structure of the economy would change in the 90s and 80s. And the way the structure of the economy is changing today because of the technological advancement, because of the digitization, etc. So many of the products and services that you include into the CPI may become obsolete very soon. I mean, if the technological advancement moves very faster. So to that extent, the series will continue to get obsolete as we move, say, another 2-3 years down the line, and again we may say that look, now this series is not capturing the actual activity in the economy. So that criticism will always be there. But when the series is updated, I mean, the base year is changed, how much of the current data or current commodities and products and services you have included into the CPI or WPI basket, which represents the current economic activity, will ultimately determine the overall, quality of GDP estimation. And my sense is that NSO is very, has taken this into the account.
Okay, Rumki, expand further because we are still waiting for the press conference to begin. And just to recap for our viewers, the new series GDP growth for the third quarter is at 7.8%. FY26 is at 7.6%. Nominal GDP for FY26 is at 8.6%. We've also got data on the fiscal deficit and capital expenditure. We also have tax revenue data. But some of the key points that we have already covered, including mining and agriculture showing significant dips, manufacturing rising significantly, construction marginally higher, private consumption growth at 8.7% for the quarter versus 6%. We went through that data as well. My colleagues tell me that the press conference hasn't started as yet. So, Rumki, closing comments, because we have no estimation at this stage as to how much time it will take. But closing comments from you, and then finally to Sunil.
Closing comment is...
yeah.
Sorry.
Please go ahead. Please go ahead.
So, what I would say is that there have been quite a few revisions, especially some past year data numbers have been revised down, especially the growth when we saw the year when we saw growth of 9.2%. That has been dropped quite a lot, whereas the election year turned out to be stronger than what it was estimated. So, I think what the GDP number shows is kind of moving along 7% growth, which is exactly what Economic Survey had said. This is where our potential growth is. This is where we are kind of moving around 7.5. We should be able to maintain going forward that manufacturing is doing well. I think the export numbers are also in. They are kind of suggesting that the export went up by 6.3%. So that is a good number to come in. 5.6%. So which is not a bad number, especially the fact that that was the quarter when we had almost 50% tariff on our exports through the quarter. So exports have done well and manufacturing has done well. Clearly, this is a good sign that we have been able to decouple ourselves from the global uncertainties. Domestic demand remains strong. It's a story of resilience. We have proved ourselves. I think that's where the government is also trying to message through the budget. And I think it's time we basically now look at a long-term growth, double down on efforts. And as you said rightly, now that new numbers have come in, policy making will be much more targeted, much more sharper, and that will probably help the government to make sure that we move towards Viksit Bharat in the desired way.
So I now have a detailed FAQ on the new series of GDP that the Ministry of Statistics and Program Implementation has released. It basically answers for those of you are statistically inclined and want to go into details. It explains what has been done. But just one point to recap. To the question of what new data is being incorporated in the new GDP series, both of our experts mentioned that, but I'll recap that for the benefit of everyone. Measurement of the household sector, this was a point that came up. GST data, again something that was mentioned. E-Vahan, data from E-Vahan is being used to estimate the private final consumption expenditure related to road transport services. The public finance management system data is being used to compile central government estimates and allocate them among states. New and updated rates and ratios have been adopted based on recent studies conducted by expert institutions. The FAQ tells us that these include a grass and fodder study conducted by the Indian Grassland and Fodder Research Institute for Agriculture, fisheries studies by the Central Marine Fisheries Research Institute and the Central Inland Fisheries Research Institute, a study on milk and milk products by the National Dairy Research Institute, and a study on transport services by Jawaharlal Nehru University. And you can check this on the MOSPI website. It also then goes on to explain the methodological changes, which is again, both of our experts here, economists, have spoken about that the use of double deflation or single extrapolation, increased dynamism in measuring the household sector, lower discrepancy through supply and use tables, updated rates and ratios, segregation of multi-activity private corporations, more nuanced estimation of PFCE, and new data sources which have been captured. So very clearly a detailed set of questions that explain what is really at stake here. I am also being informed by my producers that the press conference is expected to start very, very shortly. So I'm going to come to you again, Sunil, till that starts to add to what we have discussed so far. At this third quarter number, what is the full year number that you would be working with, Sunil?
Well, Siddharth, the earlier full year number was 7.4%. Now it has been revised upward to 7.6%. And the third quarter number has come to 7.8%. So I guess broadly the number that fourth quarter would very much be in line with the new number that the revised number says, which is 7.6%. But my own sense is that since the growth momentum is on, maybe, going forward, this 7.6 number may also get revised upwards, because a number of times it has been seen that if the overall GDP numbers, quarterly numbers starts getting revised upwards, then the overall yearly number also gets revised upward. So maybe, we could end up the 25-26 at an even higher level than 7.6%.
Rumki, what's your own estimation?
So we were predicting at around 7.5 to 7.8% because we expected growth to be around 7.9 to 8.1%. So given that it's pretty much in line with our expectation, we'll still stick to 7.5 to 7.8. We expect fourth quarter to be a little modest, around 7.4. So that's a number we will go with. So on an average 7.7% for this fiscal year.
Okay, we can see that the press conference has begun. MOSPI Secretary Dr. Saurabh Garg is there. Chief Economic Advisor in the Finance Ministry, Dr. Anant Nageshwaran, is also there, and one would imagine that the detailing that we will see through this press conference will better inform the debate. I'll request my producers to cut into the press conference because that is now right there on your screen. Let's take a quick listen.
Over to Secretary MOSPI for presentation. Thank you.
Good afternoon, friends. So I'll straight away start into the GDP base revision. We've already released the press note at 4 o'clock on our website, and I think you have the essential copies of what has been, what are the results of this GDP base revision. This is working? Yeah, okay. Yeah. So just to give a background, the present base revision is 9th in the series. If you look at it, 8 have happened, and we've also given what has been the impact in the base year after the revisions. If you would notice, we've given the impact from 1993-94, and larger impacts normally are seen when there is a substantial change in the databases. as databases keep improving, the changes, whether positive or negative, tend to reduce, and which is what you can see over the past few revisions, even in India, that the changes have been in the region of 2%, 3%, 4%, less than that. If we look at the international experience, also, this is, we took from the IMF. They have done an analysis of around 56 countries over the past decade who have changed their base or did the revisions of the base year. You can see that the base revisions have varied from minus 30% to more than 70%. But greater changes are seen in those countries which are still emerging and where perhaps the databases are getting strengthened over time. In countries which are more advanced, the negative or the positive changes are much lesser, which is what we want to mention and which is what we have seen even in India. What does the base revision entail? Essentially, there are four basic changes that happen. One is we incorporate new data sources. Second, we capture the structural changes in the economy more effectively. The third, there are some methodological improvements which are more technical and statistical in nature. And the fourth is that we ensure that if there have been any changes in international standards, changes in definitions, we incorporate that. And it is precisely these four activities is what has been seen in this base revision also. We also review the national estimates both on the production side and the expenditure side, which is the way we calculate the GDP. And the third area that we have given a lot more focus in this base revision is on having more granular availability of data so that the state domestic product is captured much more effectively. And also we are moving towards better estimations of the district domestic product, which we hope to work with the state governments over the next few months as we move ahead. I'll briefly just mention on each of the four aspects what are some of the major changes that we have done. First one is on new data sources. There are a number of changes, but I'm just highlighting three of them. One of them is that because of digital expansion, Digital India, we have a lot more digital data that is there. And the activities or the methods that are used to capture data have improved. One of them is that the Ministry of Corporate Affairs now mandates a form which is called MGT7 or MGT7A, which also gives for each company what are the main activities that they are engaged in. One of the criticisms that had been mentioned was that because of the way we got the information about corporates, we allocated the revenue or the profits of companies to the main activity. Now we are able to distribute it across all the activities that any corporate is actually functioning in. So therefore, we get a much more granular picture of what each sector is doing. The second thing is that up till now, we were using different indicators for the informal sector because we did not have a specific survey for the informal sector or the unincorporated sector. Now we have two. One is the ASUS, which is the annual survey of unincorporated sector enterprises, which is done annually. We've done 3 editions already. And the second is the periodic labor force survey, which we now bring out monthly data, which gives us an idea of what are the activities and occupations that people are involved in, and what are the kind of wages they're getting, and what is the kind of value addition in that. In the earlier series, we used to do it in the base year, and then use indicators to move it from here and here. Now we actually have surveys which are so much more granular, and therefore will capture these activities much more effectively. And the third is obviously the household consumption expenditure survey, which we did 2 back to back. And these will help us to benchmark the estimates of per capita consumption, which is what the HCES effectively does. And since we have two surveys, that will give us a much better picture. The second aspect is we have much greater administrative data. I mentioned about the digital penetration that has increased, and administrative data is something that we are trying to use much more effectively rather than focusing only on surveys, because this data is much more real time compared to others. The first is the enhanced use of GST. GST was not available in the last round of revision in 11-12, which has come up in 2017. And this will also help us in more ways than one. It also gives, not only captures not only data of the formal sector, but even in the enterprises which may be informal but have larger revenue turnovers, it gets captured in this. And the second is that it gives us much better picture of the state-wise consumption that is happening, and that will help us in the allocation of state-wise when we give the GSDP. The second is the PFMS data, which gives an idea of government expenditure right up to the village level. And this is real time, and the PFMS, with the introduction of PFMS, it's actually based on expenditure that actually happens. So this public financial management system reduces the errors, reduces the time, and also ensures that effectively we are able to allocate it granularly to the state or the area in which it happens. And the third sector is we have a lot of data. For example, e-Vahan data gives us up-to-date information of what is the kind of vehicles which are on road. We have better information, in fact, from rail transport data. We have actually the number of tickets sold from which distance to which distance. We don't have to do estimations now, it's actual data, same with air, and same with the LPG fuels. So all this gives us much regular data, granular data, and much more effective data, and therefore increases the robustness of the estimates that we make. On the methodology part, I'll just focus on two aspects. One is on the use of double deflation. This has been a major issue which has been raised over in various discussions and critiques which have been published. We are doing away with single deflation across all sectors. Double deflation would be there fully in the agriculture and manufacturing sector. In agriculture sector, it already was. In manufacturing, we are introducing it. Given the granularity of